Right, hello and welcome to another Expert Inside interview. My name is John Golden from SalesPOP, online sales magazine and Pipeliner CRM, joining you as usual from a sunny San Diego, very sunny San Diego today, actually. And today I'm delighted to be joined by Catrina Kraft, who is in Dallas, Texas. How you doing, Catrina?
I'm wonderful. Thank you for asking. I'm not
Yeah.
enjoying the same weather you're enjoying, but it's nice.
Yeah. And here's the starting point for this conversation today. This is going to come as a shock to everybody, but the tax code isn't fair. But that's your opportunity as a business owner. This is your perspective as a CPA and tax strategist behind some of the most profitable coaches, consultants, and creators in the industry. You climbed out of debt, losing 80% of your income overnight. You rebuilt your business using the same advanced tax strategies and wealth building tactics the top 2% of the wealthiest rely on to protect and multiply their money. Now you teach the clients the same through your craft money map system. You help by high earning entrepreneurs cut taxes, boost profits. And that's what we're going to talk about today. Financial freedom is a lie without a plan, right? So you lost 80% of your income, a major client collapsed, and you realized you weren't financially free. You were very exposed. So tell me a little bit about that moment. Prior to that moment, you probably thought that you had a solid business, good, and everything was moving the right direction. Yeah.
Yes, absolutely. I started my business like most people to have financial freedom,
Hmm.
to have the freedom to enjoy vacation, spend time with family, and not miss important events. But when this happened, it was like a total shock for me because me as a CPA,
Hmm.
a little of the imposter syndrome snuck in because I'm like, I'm the person that knows the numbers. And when this happened, I continue to see other business owners thrive and enjoy those vacations. And then I realized as an accountant, I was taught accounting and compliance. I
Hmm.
was not taught tax strategy and how to use the tax code to benefit you and to use that code to stop overpaying taxes, but instead use the tax code to benefit you to pay for some of those things that you want to enjoy for your lifestyle.
Hmm. And so, when you decided to, when you were rebuilding, and you looked back at like your previous situation, did you kind of realize that you were working really, really, really hard in your business, but probably like almost hamster wheelish because you were just doing and doing and doing, as opposed to as you talk about like putting a proper plan in place.
Correct. I was just doing it, especially when that client left, they actually just decided they didn't want to do that business anymore. So first thing I learned, don't put all of your marbles in one bucket because then you're at the exposure of someone else. It's just like having a W 2 job and they can say they're going to fire you at any time. But as a business owner, you need to put your destiny in your own hands. And a part of that is tax strategy. And I just realized that, I can continue to try to sell, but if I'm paying more taxes because I
Mhm.
have more income, I'm in the same position. So you need to know how to use that code because the tax things that you pay in taxes is a large percent of your business that you have to
Mhm.
give away. It's a huge expense. And until you understand that and know how to use that and reduce that, you're going to stay in that same hamster wheel of making more, paying more, making more,
Mhm.
paying more. And that bottom line is not going to be reduced.
Yeah. Yeah, it is interesting. The whole concept of tax and tax is quite interesting, isn't it? Where you pay the government for the privilege of working.
Absolutely. But if you know how to use the code, let the IRS pay for your lifestyle. Like I just told one business owner, he's looking to buy a new car. Well, with the one big, beautiful bill, it can be beautiful to some people, but some things are not good about it. He can buy a car and write off almost 80% of that car immediately. He's buying a heavy SUV. And so
Mm.
there are some ways that you can use the code to benefit your lifestyle that you want. So just think an $80,000 SUV and you're writing off like 64,000 of it in the first year. That's
Mm.
money that he's getting back in his pocket because he doesn't have to pay that to the IRS.
Yeah, yeah.
Oh,
And
yeah.
So the tax code, as you said, I mean, it's not fair. It's very complex. It's one of those things that has grown organically, whatever, over the years, and people have messed with it, and now it's a mess. So, what are some of the starting points? Where are some of the starting points that you would advise small business owners? Like, I mean, number one, obviously working with somebody like you, but what are some of the obvious tax strategies you can use?
The first thing I would say, people know they need to get a lawyer when they set up their business. But what I found is a lot of people here, let's just set up an LLC, and they
Hmm.
do that. But the LLC can be taxed as S corp, C corp, partnership, or sole proprietorship, and they don't understand that.
Hmm.
So the first step is your entity structure. You need to make sure that your entity is set up where it's tax advantaged for you. Some things you need to really think about when you're starting is asset protection, because you're building your business, but is it protected? Is your name on all of your structures? Is it open where people can then sue you because you have not set up properly? So the first step is working with your attorney and a CPA to set up your company right. I think a lot of people feel like they can't afford it. Like when I work with clients, I only work with you when you're going to see a return of your investment,
Mm.
because if I can't help you with the strategy, get back what you're paying me, then why do you need me?
Yeah.
So I always say that if you don't do it now, you're actually losing money, because I'm going to save you money with the strategies that we put into place for you.
Yeah, because let's face it, I mean, there's a real temptation, isn't there, where you go, well, I don't really need a CPA until tax time comes around, or till I'm earning sufficient revenues. Like, I don't need somebody. I can just do that stuff on my own right now. But I mean, you would say that unless you are very, very savvy on the on the tax code, it's probably not a good idea, because, as you said, it can catch up on you if you haven't your structure set up right, and some unpleasant surprises too, right?
Absolutely. The tax code is over 6,000 pages long. And when you think about the regulations and the instructions, 70,000 pages. I mean, who can do that? I've been a tax professional for over 20 years. I'm still learning, and I have a database of 1,000 tax strategies that I use in business. So it's a continual learning process, and the rules are always changing. And
Mhm.
so I don't think it's ever too early. I mean, even just to have a consultation, maybe you don't need someone every month, but waiting until the end of the year is too late. You've already did everything that you can, and you come to someone like me at April tax time to file. It's hard for me to help you because all of those decisions have already been made.
Mhm.
So don't be defensive, be offensive. And that's what I see a lot of times. As I said, as an accountant, I learned compliance. I learned to do things right and check the box. I still do that, but now I'm more offensive, and I'm looking and strategizing ahead. Like, okay, the automobile, let's do it before December 31st.
Right.
If you come to me and you said, oh, I bought a car, it wasn't the right type of car, it's too late. So being proactive is so important.
Yeah, absolutely. And so, getting involved with the CPA early on in the process, at the beginning, setting up your entity and correctly. What is the next strategy you should be looking at?
The next strategy I would look at is, are you paying yourself properly?
Mm.
Depending on the type of structure, you need to make sure that you're paying yourself properly. As a partnership, if you're a partner, you don't get wages. A lot of people misunderstand that, and they may pay themselves as a W 2. That's guaranteed payments when you're a partner. If you're S Corp, you need to pay yourself a salary. That's a big red flag for the IRS. If they see you're S Corp and there's no salary for the owners, huge red flag. If you're sole proprietorship, there's ways you can pay your children and they're not taxed. So I would say, looking at how you're paying yourself, a lot of people just transfer money, they
Mhm.
just commingle. Don't do that. That's a big red flag, because if you are audited, that means that
Uh,
you've opened up all of your personal expenses and business expenses for the IRS to look at. So
yeah.
don't commingle the money. Open a separate bank account. Make sure that you operate with a separate bank account and a separate credit card, and just do it right. Don't try to uh, figure out how to get around the system. Do it right and strategize so that you can make sure that you're paying yourself appropriately. But there's ways that you pay yourself, especially in the S corp, where you reduce your taxes. than if you were to keep yourself as a sole proprietorship. So that's the next area that I would definitely focus on.
Yeah, and I think that's an important one to underline again, just that commingling, because I think that's a mistake a lot of people make. It's very tempting. It's especially early on if you don't have a lot of, if you limited capital in your business and you're kind of borrowing here, or you're, as you said, you haven't set up a credit card for the business, so you're kind of using your own personal credit card and then you're transfer, and like you said, all you're doing is creating red flags, and that's for the IRS.
Absolutely. But there's ways to transfer money. You loan the business the money,
Hmm.
or the business can loan you the money, or you do certain types of draws from the proper entity.
Right.
Don't just use your money all the time and then start commingling. So there's ways to do that if you are in a cash crunch, but you need to make sure that you're doing it properly.
Right, and not just doing it casually because it just seems more convenient at that moment, or it seems overkill. So moving to commingling, that's a really important one. Like set up properly, get your proper accounts, like have a proper card for the business. Try as much as possible to make sure that everything operating through the business, all the finances are going through those channels, and you're keeping yourself safe. Some people, just explain to people like the benefits though of incorporating, because sometimes people don't realize the firewall that puts in place, that if you just like are sole proprietor and you haven't set your entity up properly, how you can be liable for, personally liable for things.
Absolutely. So on the asset protection, that's an area of tax law or attorney can speak on, but I can speak on it. But make sure you talk to your asset protection advisor
Mhm.
to get the proper information on what will fit for you and your state. Every state is different on how they operate as far as protection. The LLC laws are pretty new. They were developed in the 70s,
Mm.
and it's still different laws per state because most people don't realize that an LLC is a state level. That's not recognized by the IRS as a type of entity. As I mentioned, the LLC can be taxed as a sole prop, a partnership, a C corp, or an S corp. So when you tell someone you're LLC, you need to know how you're taxed and you need to know the rules and the protection laws in your state because what's available in Texas may not be available in Florida.
Mhm.
But it is important to have an entity structure because they limit your liability in some ways. Like a general partnership, you're open. You're open to any type of liability. So most cases, you do not want to be a general partnership. There's no liability for you. But
Mhm.
an LLC, it means limited liability company. It's
Yep.
limiting your liability. So if someone is suing you, what they can do is going to be difficult. They have to go through a charging order process. So that's a whole another whole
Mhm.
podcast. We could talk about that.
Yes.
But the S corps and the C corps, they're protecting you as well because now you're in the entity structure, not personal.
Mhm.
Someone sues you unless it's some type of like for me, if I do something intentional and because I'm professional service, they could come after me personally for something I did intentionally. But for my business, then that's going to be protected if I do something in my business that maybe, they want to sue me just for a random thing. Then it's going to go through my business. So that's
Mhm.
why it's important not to operate just under your name,
Yeah.
really form some type of entity structure for you.
Mhm. And just switching gears slightly, one of the things that came out of your experience was developing a very clear decision-making framework, right? Tell me how that came about and what difference that has made to your business as you have rebounded.
Yes, when I looked at it and I start taking a lot of classes, I actually worked under one of the tax advisors that was Robert Kiyosaki's tax advisor. So
Oh.
I saw all of these high income tax strategies that were happening. And then I realized the people were not working harder, trying to get more sales, but they started developing wealth. And some of that was through real estate. And so actually, my husband and I, we start real estate investing and had over 12 properties that we were investing in. That was a wealth creation.
Mhm.
And real estate is a huge tax benefit if people do not know. It can be a huge tax benefit for you. So looking at different wealth strategies, looking at investing, looking at, retirement savings, 401k, some of that can be a tax deduction. So think about this. The IRS is giving you a deduction for investing in your own retirement. How can
Mhm,
you lose with that? So
mhm,
knowing now, okay, these are the strategies that my mother didn't tell me about.
mhm,
But we didn't know because we're not sitting at the table of these high wealth strategists and the asset protection attorneys to learn all of these skills. And so
mhm.
once I became involved and in the circle, I started realizing I needed to do something different as far as how I was strategizing and deducting. And I started maximizing my own savings through strategies and through my business. That as accounting, we're not taught tax strategy.
Mhm. And on that note that you said about investing and getting a kind of passive income, that's I guess one of the tough things about and you know better than most about having your own small business, right? At the beginning is those peaks and troughs, right? You
Yeah.
go looking, you spend a lot of time, prospecting for business, you find some clients, then you spend all your time delivering for those clients. Then you're like, oh, I got to find some more new clients. So it's always up and down and up and down, and it can and that can be that can be very unsettling. Having some passive income, having something else that can smooth out those peaks and troughs is obviously a good thing.
Absolutely. Because a part of it is just your nervous system always worrying, about things, and then you can't function properly because
Mhm.
you are worrying about the money. But when you have the passive income that's coming in, whether if you're managing the property like we did when we first started, it's a little bit active. I would
Sure.
tell anyone if you're just buying one property, you may lose money because
Mhm.
there's going to be times when that's empty and then you're going to be paying that mortgage, you're going to be paying the taxes, and no money's going to be coming in.
Mhm.
So I really like people to have three properties at least. So if one is empty, then you still are getting that passive income.
Mhm.
Because if not, you are going to have to cover those expenses. And then that
Mhm.
could be a larger drain for you. But
Yeah.
having that passive income does allow you to function knowing that you are going to have some income coming in if you do have a slowdown in your business and that revenue.
Yeah, and there's so many different ways you can invest now, even in real estate and etc. I mean, you don't even have to buy. I mean, you can go in on fractional ones if you're,
Mhm.
if you don't have that, if you don't have a lot of money, or you want something that's more kind of hands off. And then there's lots of other things that people can invest in. But I think it's a really good idea. And the other thing too is what you mentioned about earlier were is looking at your business, but looking at, especially nowadays, what can you automate in order to free yourself from just being in the weeds all the time.
Yeah, absolutely. I mean, and that's a part of working with, say, if you're working with a tax strategist
Mm,
or a bookkeeper, automate some of that, free yourself. I mean,
mm,
most people don't want to do bookkeeping or taxes, so why are you doing it? And you're probably losing money because you don't know what you don't know. So you don't know what you can and cannot deduct.
mhm,
So instead of losing that money, losing your freedom of time, possibly getting triggered into an audit, why not pay someone that's probably going to allow you to save more money, and then it's going to free your time to make more money in the things that you love and in what are passionate about to help your clients. So I really advocate for that. People ask me, well, I can't afford a bookkeeper. Well, can you not afford a bookkeeper?
mhm,
I mean, if it's $200 to $300, how much can they save you probably in missed expenses that you forgot about, or to stop you from commingling? There are
mhm.
some things that you got to think about, that having that professional just overseeing your financials can give you that peace of mind, that understanding, and then some freedom.
Yeah, because let's face it. I mean, if you're not, you're starting a business not to do taxes and not to do bookkeeping. That's not the purpose. Unless you're setting up a business like yours, clearly. But in most things, you're setting up a business to do whatever. Uh, and let's face it, unless you have a particular aptitude to this, you're never going to be very good at it. You're never going to want to do it, right? The bookkeeping, the tax, you're never going to want. So saving money, sure, but saving money by doing something that you're not good at, you probably won't do that well. and you'll probably hate doing, and it'll become the last thing you want to do, etc. So there's so many reasons not to do that. Instead, to focus on the things that you're good at and you're enthusiastic about, where you can bring greater value to the business.
Yes, because I mean, I can imagine me trying to learn tech. If I had a computer problem, I'm not going to try to look at ChatGPT. First,
Mhm.
don't do that for accounting. Please don't do that. I'm not going to try to YouTube it because I'm afraid I'll lose all my data. So I know that I need to go to a professional that
Mhm.
knows and understands and has been trained in this. So the same with accounting. You need to know your numbers. I'm not saying that. You need to understand your numbers, but do you need to be the person complying and entering a receipt for McDonald's for $10 and then not knowing if it's a deduction or not? So there's things that, yes, we can do better as business owners instead of trying to do everything. I know starting out it's hard because you don't have the money,
Mhm.
but look at it as, can that person help you save money so you freeze your time
Mhm.
and you can then go out and do other things like sales and
Yeah.
bring more customers in.
And just a last question, because you just alluded to it there, so I just wanted to come back to it. So with AI now, people are starting to think, well, I don't need this and I don't need that. I just feed it into AI, and AI will give me all of this stuff back. So just tell me about the dangers of going down that road.
I can give you my own experience with AI. So there are some accounting AIs that's specifically for accounting and it goes through the code. But I use ChatGPT just to see what would happen. And it lost $40,000 in tax savings for me. And what you need to realize, you have to know the prompts. You can't just tell AI, give me some deductions.
Yeah.
You're going to go down a rabbit hole, believe me. And they're not going to really know because you're not going to know, okay, am I S Corp? Or my children or my employees? They're not going to know to ask those types of
Mhm.
questions for you, at least not at this point.
Yeah,
At
yeah.
some, it will grow. But it did miss 40,000, and then I asked AI about a certain form, and they gave me the wrong line number. I said, AI, that is not correct. I'm looking at the form, and it came back. You're correct, Catrina. Let me research some more. So
Yeah.
I was like, do not use AI for trying to find answers. It's not going to come out well. If you don't really know the prompts, you don't know what's right or wrong, it hallucinates. So it could really
Yeah.
cause problems. And if you tell the IRS, what was your reason for taking this deduction? I used AI.
Yeah. Did you get
The auditor is gonna, okay, let's go ahead and fine you right now and give you a penalty with interest.
Yeah, yeah, no, exactly, exactly. Well, listen, thanks so much, Katrina. This has been great, great information. So packed and full of really, really good information. So I would encourage you to go check out the work that Katrina does. All of her information will be below this video. Before we go, please do remind people about what you do.
I'm a tax strategist and a wealth strategist, and I help six-figure and seven-figure earners stop paying taxes that they don't need to and build more profit in their business.
Excellent. And who doesn't want that? So fantastic. So thank you again. Thank you for watching and listening.